Good morning, traders. Richard here, a quick Ichimoku cloud chart market review of the Nasdaq 100 E-minis futures contract. In the last update, we were right here, right after that rebound from this cloud chart support zone here, and we back above the top end of the cloud, so that changed the outlook on the daily back to bullish. Any price action above the cloud is bullish, any price action below the cloud is overall bearish. But support came back into the market and we popped back above the cloud. That's the good news. Then continued the rally to rebound from the top end of the front end of the cloud. Yeah, you can see that's a successful support there, and now we're navigating these old highs to get past this resistance. So we've taken out two of the upside targets there. The next one is the top end there, 26,100, and then the other one is 26,620. These are the upside targets for the Nasdaq 100 index futures, the E-minis on the daily Ichimoku cloud. Let's go and take a look at the weekly one just to get some form of an idea how risky the market is right now. We can see the volatility breakout signals here. The AI generated ones give us some really good trade situations there. Now this is kind of like a consolidation period. Yeah, you could argue it's forming a base and then a breakout from that base. We can then project this move on top of that move to the upside. But we are a little bit extended from the top end of the cloud. We always look at the gap between the price action and this top end cloud chart support zone. And on the daily, on the weekly, we can see this top end of the front end of the cloud that came in to be tested for support here during this period of time there. Now this volatility breakout AI signals got a very wide stop loss there, 23,350. So you can see it's really accommodating this volatile trading sessions in the market during this consolidation phase. But keep an eye out for the support for the quarter should hold here at this 24,820 and 25,000. So that's the line in the sand really, in between where the standard line of the Ichimoku cloud, as you can see there, the standard line coming through there. So that's a major support zone, so we don't want to be below that level. And if we start dipping below that level, then there's a high risk that we might come back and test the top end of the cloud for support. So we could see something like this coming through if the resistance holds at the top end of the cloud there. But hopefully the earnings season will still get us through, break through that resistance, that significant resistance, and then continue higher. But we are going into a seasonal weak period in the market as well after the earnings season, the February-March to a March low. So we can expect a bit of a correction if the earnings results aren't very positive or above market expectations. So keep an eye on these levels. On the weekly, you can also see the top end resistance there, 26,620 is the upside resistance targets there. And the AI volatility breakout signals on the weekly still going strong. Turning to the 4-hour Ichimoku cloud, we can see last time we had in the last update, we were struggling with this cloud chart resistance. Did manage to break through that. Had a very volatile rebound from this exponential moving average there. And we did get a nice significant rebound from that zone as well as the standard line of the Ichimoku cloud. You can see there also these two areas offered another swing trade opportunity. Volatility breakout came. We broke past the cloud chart resistance, and the state of the market there on the 4-hour changed back into bullish. We were a little bit bearish here in and around the price action below the cloud. So far so good. The 4-hour looking good. Got to the first two upside targets. The next one is 26,188. So keeping an eye on those levels. Now, we've broken through the cloud. What sometimes can happen is we come back to retest and test the standard line of the Ichimoku cloud there, the turning line there, and then the standard line where that comes through support. So these levels are the critical support zones for the current rally. You do not want to be below this zone or at the bottom end of the cloud. So far so good. Volatility breakout signals working out well here. Cloud chart cross, great signal there. Now looking for support to come in at the turning line of Ichimoku cloud, and by that time the standard line, which is sort of buried in here, should come through and act as a support zone. But these are the downside support targets for the rest of the month going into February. So we could see a consolidation back down here, and then another attempt to break out of this resistance zone. So these are the upside resistance targets as well on the 4-hour Ichimoku. But so far so good. Great breakout trade, cloud chart cross trade there on the Ichimoku cloud using artificial intelligence and Ichimoku clouds together. Just a quick note on the 4-hour Ichimoku, the trailing stop loss for this volatility trade, and that one is now set at 25,918, 25,900, just below the 26,000. So that's the trailing stop loss for the volatility breakout trades recently on using the AI and the Ichimoku clouds. Taking a look at the 60-minute, you can see the volatility, huge sell-off here, and then a fantastic rebound from the bottom-end cloud chart support. So, interestingly enough, the AI did accommodate a huge volatility trailing stop loss there. So you can see the wide stop loss that the AI uses in this particular case. Now we had a fantastic rebound from the bottom in the cloud there. That was another cloud chart buy signal, as well as these top end cloud chart rebound buy, and all these trades up now with the trailing stop from the Fulgent AI perspective 25,750 on the 60-minute Ichimoku cloud. Until next time, happy cloud chart trading. Bye for now.